Now we'll make the ledgers. First of all, Revaluation account is prepared, then Goodwill account, then capital accounts, then cash account, then balance sheet is prepared. So this should be the order of your ledgers and balance sheet. So I'm going to start Revaluation account. Buy building 8,000 rupees and the total is 8,000, and on debit side 2 furniture 2,000. So the balancing figure is 6,000 on debit side. So this is the basically profit on revaluation. So to A's capital to B's capital. In the inner column you will write down 3,600, 2,400, and in the outer column 6,000 rupees. So this is the profit on account of revaluation. We had left space for the journal entry for profit or loss on revaluation. Now go back to the journal entries and draw the journal entries, and that will be revaluation account debit to A's capital to B's capital 6,000, 3,600, 2,400. This profit has been distributed in old ratio of 3:2. Now we have to prepare Goodwill account. Be careful. We need to prepare Goodwill account if Goodwill account has been raised or written off. I mean to say, if it has been debited or credited by you, only in that situation you need to prepare Goodwill account. Otherwise you don't need it. Because we have raised Goodwill account, I mean to say we have debited Goodwill account, we will have to prepare now Goodwill account. So on debit side, this is the ledger posting to A's capital 9,000, to B's capital 6,000, to C's capital 5,000, total 20,000 rupees. So by balance CD on credit side, that will be rupees 20,000. What it means? This is the closing balance of Goodwill account, and all closing balances of assets and liabilities are shown in the balance sheet. It means this 20,000 balance of Goodwill will be shown in the balance sheet on asset side. Now we have to prepare capital accounts. So, we always prepare columnar capital accounts for the convenience of the solution of the question. I mean to say 3 columns on debit side, 3 columns on credit side for A, B, C. So by balance BD, 30,000, 30,000 for A and B, and by reserve fund, 6,000, 4,000. We had distributed accumulated profit, then accumulated loss on debit side to profit and loss account, 3,000, 2,000. Then revaluation profit by revaluation account, and in the inner column please write down profit. That will be 3,600, 2,400. Then C comes as a new partner. So by C's capital on credit side 25,000 in the column of C. Then there was adjustment entry for the Goodwill, in which A and B were credited and C was debited. So by C's capital account, in the inner column Goodwill 3,000 in the column of A and 2,000 in the column of B. It means A and B has been credited. Now come on the debit side to A's capital to B's capital. That is for Goodwill. Please write down Goodwill in the inner column 3,000 and 2,000, both amounts in the C's column. Now Goodwill account has been raised. When Goodwill account is raised, all partners get the credit. So by Goodwill account, write down raised in the inner column, and the amounts will be 9,000, 6,000, 5,000. In this way, the total for A is 51,600, for B 44,400, and for C 30,000 rupees. And to balance CD, these are the balancing figures: 48,600 for A, 42,400 for B, and 25,000 for C. In this way, we have found the closing balances of A, B, C. These closing balances will move to the balance sheet. And after completion of capital accounts, you have to prepare cash account. So prepare the cash account. On debit side, we write down opening balance and receipts, and on credit side, we write down payments and closing balance. So to balance BD means opening balance. This amount will be taken from the last balance sheet. In the last balance sheet, the cash balance in the balance sheet on asset side was rupees 15,000. This is our opening balance. Then to seize capital 25,000 because this is the receipt for the firm. So total 40,000. Now come on the credit side. Buy balance CD 40,000 rupees. So this is the closing balance. It will be taken to the balance sheet now. Prepare the balance sheet now. This is the balance sheet of ABC. Asset side. Building. Previously it was 40,000. Now it is 48,000. Cash. Previously it was 15,000. Now 40,000. This is the closing balance we have taken from cash count. This is the balance CD. Now profit and loss count. Previously it was 5,000. Now you don't need to write down it. The reason being it has been transferred to capital account. This profit and loss count has been credited. It means it has been removed. Then furniture 18,000 because previously it was 20,000. It has been depreciated. So now it is only 18,000. Now we have to create one more item, that is goodwill. You know, by balance CD in the goodwill account was 20,000. So it will be taken to the balance sheet asset side rupees 20,000. So in this way, goodwill account is appearing in the balance sheet on asset side. It means we have raised goodwill account. So total is 1,26,000 rupees. Now please come to the liability side. A's capital 48,600, B's capital 42,400, C's capital 25,000 rupees. And then there was reserve fund of rupees 10,000. It has been transferred to capital account. So it's finished now. Creditors, previously this amount was 10,000 and it will remain 10,000. So total 1,26,000 rupees. It means question is all right.